Hello, this is Property Matters, a weekly catch-up on the world of property, supported by Fairview International Property Consultancy and auctionproperty.co.uk. And we're live every Sunday on our website, propertymatterstv.co.uk, and also live on YouTube, Facebook, LinkedIn as well. So if you're watching on our website, please leave us a Google review. If you're watching on social media, get involved in the comments below the video. And our email address, if you'd like to suggest something for us to discuss, is hello@propertymatterstv.co.uk. If you don't have time to watch the whole show live, then you're more than welcome to join us on the podcast, which is released at 10 a.m. on a Monday morning. Just go and get it wherever you find your podcasts on a weekly basis, and just search Property Matters TV and you'll find it. Also, we're broadcast across the week on Dilsey Radio, so we welcome listeners there too. Let's take a look at the weekly property news with Joe Joshi. Morning, Joe.
Yes, good morning. Good morning, Paul. Good morning to all our viewers and listeners. And of course, a big thank you for Bob last week joining us from Dubai. I hope he had a very restful week after sitting in the mortgage world. That is quite up in the chat points at this moment in time, obviously with the interest rate last week. But I'm sure Paul has an abundance of questions for me this morning.
In the graph session today, because we have the January data for the UK House Price Index, and as we can see there, annual house price inflation is minus 8.8%, and there's a 12% increase year on year on demand, and 21% of sales agreed at a price of more than 10% below the asking price. So it's a bunch of mixed messages. There is a rebound in market activity, but it's coming from a low base. That's the important point to make, I think. Housing demand and sales agreed have registered a strong seasonal rebound over the first 3 weeks of 2024 as sub 5% mortgage rates support market activity, which is what we talked about last week. Buyer demand is 12% higher than a year ago, which remains 13% below the 5-year average. So still not a great place to be in, but and that does include, of course, the pandemic years of 2021 and 2022. So it's a positive start to the year, reflecting a return to pent-up demand following a weak second half of last year when many buyers delayed moving decisions in the face of rising mortgage rates. All measures of sales activity are up year on year, and they reported an increase in sales agreed in the final weeks of 2023, and this trend has continued into the new year. New sales agreed are 13% higher than last year across and higher in other parts of the country as well. This is evidence that buyers and sellers are becoming more aligned on pricing. A greater flow of homes listed for sale also indicates that sellers, many of whom are also buyers, of course, feel more confident. Overall, supply is 22% higher than last year. Average estate agents has 28 homes for sale on their books, boosting buyers' choice and keeping prices in check. So still very much a buyer's market, Joe.
Yes, Paul. Yeah, I mean, of course, it's good to have your graph back up there and challenging me for where it's going. But the reality of it is a buyer's market, Paul. We can't get away from that at this moment in time. It is an opportunity for first-time buyers, especially. I think investors have kind of gone off track because of the number of buy-to-let people that wanted to come out due to the increase of mortgage rates, and also other taxation questions that they have at this moment. So yes, there is a little bit of flurry in interest beginning of the year so far, and I think most of that's based on election fever, really, as to what could happen, what couldn't happen. And then, of course, on top of that, it's about what the Bank of England may or may not do. And of course, we know that they didn't do anything this week, so that is, that's at standstill. But the lending market, as Bob says last week, he's had the most buoyant January forever. There's a lot of people still out there that want to buy. I mean, that's something that we just are not going to get away from. There is always a demand of people that want to buy. And it's just a case of what fits. And of course, in terms of affordability, those are the real tests that are being done. But I think all in all, the activities there is sort of got a little bit of a sting in the tail. But as far as demand is concerned, it is cautious but good.
Yeah, we can see that on the screen there. We've got a graph of the buyer demand, the number of sales agreed, new flow of supply, and also stock of homes for sale. And in each case, as it said in the intro there, that everything is up. So buyer demand is up 12%, number of sales agreed up 13%, the flow of new properties is up 14%, and the stock of homes for sale as a result of that, of course, is up 22%. Interesting to see that the biggest price falls have been in the east of England, Joe, and in the southwest. London and the east of England has led the rebound in new buyer demand in the first part of the year. But interestingly, other areas are below average increases at the moment. And over the last 7 years, London has lagged behind the rest of the UK in terms of sales volumes and price inflation. The price index shows that London house prices have risen just 13% since the start of 2016. It's an interesting prospect. So London has lagged behind the rest of the country, particularly when you think that over that same period in 2016 to now, Wales has gone up by 50%. And the average across the whole of the UK is up 34%, whereas London, a price of a flat in London since 2016 has gone up by just 2%.
No bad things really for those in London, in all honesty. But if you look at those sort of 2% by comparison to Wales, if the average house price, let's say, is, I don't know, 400, 500,000 pounds, 2% increase on that in London is still a good increase by comparison to something that might be 50, 60, or 100,000 pounds in Wales, and may have a 10% increase. So it kind of levels it out. It's all about the demand, and the demand in London will never ever go away. Of course, over the pandemic years, there was a lag in demand because the international buyer was just not able to get across and do those things, and do the purchases. But they have obviously come back, and it is a buyer's market, so they are buying. And because it's a buyer's market, that price isn't increasing. But I'm pretty certain once we settle down with whoever the government will be towards the end of the year, beginning of next, we will find that the true colours will start to come out, whether it's a buyer's market continuously or a seller's market.
Yeah, we can see on the screen we've got the house price to earnings ratio, which has got London, so the south excluding London, Midlands, North, Wales and Scotland. And you can see, to take Scotland, for example, the house price to earnings ratio. So a house is basically 4 to 5 times the annual salary in Scotland, whereas in England currently, in London, it's around about 13 times the annual salary for a property. But you can see that, and that's the maroon colour at the very top of the graph, you can see how that's fallen. But look at that growth from 2008, Joe, up to 2016. That's when London really did go crazy in terms of values. And they're suggesting that the reason for the fall, as you alluded to there, was that tax changes aimed at investors and overseas buyers. Also, the Brexit vote, of course, did a lot of damage for overseas investment in terms of London. And of course, the jobs growth and the global pandemic also helped to restrain London back, whereas the rest of the country has arguably caught up a little bit, but it was a lot closer back in 2008 than it is now. And London is still way, way ahead, with the south, of course, not far behind it. But it's interesting to look at that and see how over that period, 2008 to 16, how so much London grew.
Yes, I mean 2016, and from then till now, it has grown a lot, and it will continue to grow, Paul. It's just those particular years that sort of slightly put it back, but the demand for London never ever goes away. And if you look at that, I mean, it's such a wide gap, isn't it, between London and the rest of the country, that no matter what time and how many years ago, even at the earlier years, the graph still shows is a huge gap between London and the rest of the country, especially the south, and more so the north, and perhaps Wales, etc. So, for investors and for home buyers, London is always the ideal place to go to. The other thing, of course, you have to bear in mind is communication. And if you look at where you said that the east has probably grown the most next to London, all of those things are about communication. It's about how connectivity works through. I really can't endorse a lot of the rail system this last week or so, with the number of strikes and all sorts of things that are causing people mayhem. But the reality of it is that that direct communication from, East Anglia right the way across to, Cambridge, and then across this way, into the west, all of those things make it, make London the most viable, even from north to south, from Manchester right the way down to London in commuter time. At the moment, even though, the high speed rail network is still, under construction, it still shows that the number of people that are prepared to travel from the north down to the south, and be in London for maybe even 2-3 times a week, just to be part of the city buzz. So, and other cities haven't actually got the same attraction, irrespective of the amount of energy that goes into it, like Manchester, Leeds, and so forth. It's still London that leads the way, no matter what happens, in any climate, any economy, and any colour.
They're suggesting over the rest of this year that affordability in London will get better. They reckon that earnings will rise faster than the house prices in London, which is going to be good news, particularly as we've still got high mortgage rates. And as you say, the higher value of the property means it's always a stretch and a squeeze to get to that. The rebound in activity in the first weeks of 2024 is positive news, and we have a graph on that, I do believe. Joe, if I can just find it here for you. Yeah, there we are. So we can see now on the chart here that at the very end of the chart on the far right-hand side, we've got January 2024 there, and you can see that there's a big uptick from demand on the demand index, where prices have been falling steadily through January 23 to the end of the last year, and then all of a sudden right back up to sort of parity again at this point in time. So there's been a big uptick, and that's largely due to the fact that mortgage rates, of course, fell to 4.2% over that period of time, which supported sales volumes and led to firmer pricing as towards the end of the year. So the fact that there is an expectation that mortgage rates will drop further, that's boosting the optimism in the market, one would suggest, Joe.
Yes, I mean the mortgage rate. Just to be absolutely clear, the Bank of England base rate is still 5.25. That has not changed, and we have discussed this many a times, and I think that it'll be hard pushed. I know optimism says it's going to come down by maybe another percent, and as Bob said last week, he reckons that by the end of the year it will come down a further 1%. I kind of feel that it will probably stay around 5%. It might get to 4.75, but you're certainly going to get around 5% as the average. The fixed rate options are the options that are being floated around a lot. So the 4%, the 4.5% at the moment are the long-term fixed rates that are being offered. And that's what makes it a little bit more attractive in terms of where people can actually say, okay, well, affordability wise, over the next 5 years, if I fixed my rate over the next 5 years, that is something that I can afford to do, and then see what the market does. So yes, certainly that is penting up demand quite a lot, and it's probably what keeps the mortgage brokers busy at this moment. But the reality of it is the base rate is still where it is, and it's up to the lenders. Now, a lot of the lenders are feeling optimistic about that, especially with the inflation rate coming down. But that's not down to the levels that they want to expect it to be. I'm sure magically it will be just by the time the election comes. But for now, not that I'm a pessimist, but I just think that they'll have it conjured up, and all of a sudden magically it'll be 2%, which is what the target is, conveniently for the purpose of election. But from my point of view, the rate is exactly where it is, and I think there's a good opportunity for first-time buyers, especially now, to get on that property ladder, to go and fix your rates at the best you can, and sit back and wait and find that your capital growth will start to happen probably over the next 5 years.
Zoopla say that there are a number of factors that will keep prices in check over this year. Firstly, a greater supply of homes for sale will provide buyers with more choice, especially for larger family homes. Secondly, half of those with a mortgage are yet to refinance onto higher rates. This is important as many would-be buyers are upsizers who will need a larger mortgage to move to a bigger home. So higher repayments will ensure buyers remain price sensitive and focused on value for money. And thirdly, the data shows that we're still in a buyer's market. A small but not insignificant number of sellers continue to cut asking prices to make sure homes attract buyer interest, continuing the trend from 2023. And furthermore, 1 in 5 sellers are still having to accept more than 10% off the asking price to agree a sale. It's close to 1 in 4 across London and the South East and rising across the rest of the UK. So sellers must continue to price realistically, they say, if they're serious about moving in 2024. Improved market conditions will boost the chances of a sale, but sellers shouldn't expect to list at a higher asking price. So there's a general acceptance of realism in the market, that's suggesting, I guess, Joe?
Well, look, let's just rewind that tape for a minute and go back to the pandemic years and how the market went absolutely gaga when the race for space and every other terminology that was around COVID came into play. Everybody started to buy property. Property was the only favorite and flavor subject of the day. And we forget that, there was an increase up to 23 to 25% almost in some parts of the country based on supply and demand. Well, if you're having to cut your cloth accordingly, even at a 10% reduction, it's not a price loss. It's actually maybe more of a correction to what the reality was, because it is based on supply and demand. And the demand is still now by the first-time buyers. The demand is off the scale for investors because of other situations. So yes, if you're having to correct your price by 5, 6, 7, 10% in order to make that sale, you're not actually losing out by comparison to maybe 2018, 2019, so forth. You're still making money. It's just that, but it's relative to what you're going to move to as well. So it's not as if like you're saying to yourself, oh my God, I'm losing 10% off my bottom line. You're also gaining 10% on the one perhaps you're going to go and buy to. So it levels itself out, Paul. But yes, of course, there is going to be a correction in the marketplace.
They say that it was always going to take more than a year to adjust to these new higher mortgage rates, and that's what they're seeing in the market right now. But they're suggesting that rather than big rises in prices this year, there's going to be big rises in the number of sales of houses. So they reckon there's going to be more sales this year, which should be good for the market and certainly for the I should imagine now cash-strapped estate agents who've not been getting a lot of volume that they were used to in previous years. Let's move on to another topic, completely different from what we've just been discussing, and something we've never discussed before, and this is about the modern methods of construction, or MMC market. So the government's not come up with an approach, says a letter that was sent to Michael Gove, which fully supports the use of modern methods of construction for house building. This is what a parliamentary committee has said. The Built Environment Committee published a letter written to Housing Secretary Michael Gove in which it questioned the government's understanding of the costs of MMC, said there was limited confidence that there was a coherent plan to encourage the construction method, which meant the government's strategy could not be scrutinised. The committee said, as the government pointed to MMC as central to housing delivery and had invested money in it, this position was very disappointing. So that led me to think, well, I've not actually heard of the phrase MMC, so I Googled it and had a look, and largely it's what we often see on some of these property programs on television when people build these modular houses and these modern ways of building houses that are smart and efficient, and things come pre-made from somewhere else and it's all clipped together on the site. That's my layman's understanding. I'm sure you can give me a more precise assessment, Joe.
Lego comes to my mind, actually, probably
yes.
the easiest way of describing these MMC scenarios. So modern method of construction. Look, the reality of it is we're not geared up for it in the United Kingdom. We never have been. It's one of those grand design is what you were looking for as the program. Grand design are the people that come up with these amazing, unbelievable houses, and people spend their life savings trying to put it together. and a lot of painstaking time. So it's a great program, and of course I do watch it every so often to see what kind of mess people are making of their lives and also the properties that they're trying to build. But the reality is, United Kingdom is not actually geared up for that kind of thing. We're not into modular. We're not into Lego, apart from Windsor, where there is a Lego land. The rest of it, it just doesn't stack. Too many issues, too many problems that come in. So let me list a couple of those just to sort of share with our viewers and listeners here. First and foremost, green belt policy creates a huge problem for such things. To try and build in perhaps what they call an area of natural beauty, where construction cannot happen to vary other homes, to make sure that they keep certain sort of images. Planning itself causes a huge issue. And then, of course, we don't have the builder or the building materials or the builder types that can go out and build such beautiful, grand design homes of our desire. You always have to hire in people at much, much higher costs from other parts of the world to come in. So something like Huff houses come to my mind, which are modular properties, nice looking properties, full of glass, don't always fit into the environment that we kind of live in. But there's another issue that really causes a problem with these things, and that's borrowing and structural surveys and so forth. Our surveyors are not designed to understand these properties, so caution comes in. People buy, these on bridging loans and finances, because most high street lenders are not geared up to provide mortgages on these types of properties. And to make matters worse, you might have bought it and done it cash, but then refinancing it, if you decide that you want to sell it, becomes another challenge. So this modern method of construction on a small island, which is full of beauty, natural areas and green belt and all sorts of other restrictions, really doesn't lend too much space for the grand design types of house, which is why the MMC is not successful. Now, in places where there's more space, more country space available, more diverse type of building, take anywhere else in the world, you can find, the United States is full of these sort of things. And you can, make these modular type of homes pretty much anywhere. A lot of Europe, lots of European areas are full of these modulars. They try to bring these modular type of homes into perhaps airspace, which means that you can have the flat or the property built off the site, built in a factory somewhere, and then bring it back on the back of a lorry and then stick it up on the top of the roof and so forth. But the reality of all of those things, especially with modular, is that even the factories that are making are not making it enough, and most of them are going bust because they just don't have the demand for this type of properties. So the government is really spending time and energy on things that they really can't deal with. If they just, the old adage of why fix something that's not broke, if they just do what they're supposed to do and build houses with bricks and standard stuff that we know that we're allowed to do. I've got an instruction right now where a client had built a property with like a Meccano set from China. So the idea was that they'll come in and they'll have this modular type of property, which was built, and in all honesty, he buried about 80,000, 90,000 into the ground. Then COVID came. The pieces did come over from China, but ironically, during that period of COVID, some of the pieces didn't fit. So of course, the project stood still to such a point that it's now having to just be sold without that modular, which is all on the floor, because nobody could actually do with it. Now to try and get that steel taken away is another job. So it just becomes really expensive and unprofitable, unviable in every possible way. And I just don't think that we're cut out for it in the UK. Everyone that I've seen pretty much has been pretty much a disaster. If you take the grand design program, and those that are watching and listening, who I'm sure have watched these things, you will see the pitfalls that every builder or every person that's had a dream about building the most eco-friendly, the most economic, the most glass, the most curves, the most waves and most shapes that they come up with. It just is not doable. It takes way longer, and time is money.
Yeah, you often find that the people that do those kind of designs are people that are in that industry and specialise in those fields anyway. Bob mentions that there is specialist types of mortgages now emerging on the market to catch up with this, but the Built Environment Committee do say there is definitely a risk aversion, particularly from insurers. And there's a lack of clarity from the government around what the building regulations actually are. And they even say there's contradictory evidence as to whether they're any more expensive or any less expensive than doing it the traditional way. But certainly commercial businesses have not really taken up on this in any great amount. But of course, the government have actually said that as part of the Affordable Homes Programme, MMC builders have to build a certain percentage of these homes into the affordable homes programs, and some of those housing associations have actually embraced it and got on with it and done it, and have had reasonable amounts of success. But I think what the committee's saying is, why hasn't this been rolled out and adopted on a more wider basis? Because, as you pointed out, Joe, it's actually very, very popular in Europe.
Well, I mean, let's just wind that tape for a minute. I mean, going back to the government's policy about saying that they want to do affordable housing. You know, back in the late 70s, 60s, 70s, and some parts of 80s, they built what they call steel framed homes. And Bob will tell you now that there's probably one, if not possibly maximum two lenders that are actually prepared to lend on those steel framed homes now. They just weren't cut out for ordinary lending. Surveyors are not qualified enough to understand those. So they'll put a million caveats on there just to make sure that their indemnity policy isn't in a harm's way. And so with that in mind, most lenders will be cautious in lending. So yes, the government can turn around and say, we want to build these modular homes, stack them up very quickly and finish them. But when people turn around and say, well, actually, I'd like to buy one of those, or the housing association turns around and says, you can do a part purchase with us, a shared ownership for argument's sake, or you can buy it outright at the end of a certain term, they then can't get the finance for those types of properties. So it might look cheaper at the beginning to put them together, but actually in the long term, they don't actually give you the comfort, the security, and actually also the return on investment. Because if somebody is built one of these properties and then somebody buys it and then the next person can't get a mortgage on it, it's really not going to be a good investment. So I think the government really need to rethink about what they want to do or how they should do it. But I have not seen a successful story so far in my 43 years of property where I can say to you that that particular modular type of home is the way to go in the UK. Yes, perhaps all over Europe it works. Their models are different. They have the space, they have the vision. I always think that these are normally designed for architects to win awards. I did something really fantastic and stupid and look at it, and so therefore that makes me a great architect. I'm not having a pop at the architect, but that's how they look at it. It's their win, but unfortunately it's not practical.
Yeah, they say that the startup costs in reality are quite high, and that's being passed on to customers and then obviously on to the government in terms of subsidies and so on. They also say that they've literally just rather than they just throw money at it, and actually what they should have done really is to come up with a set of guidelines on how it should be properly funded and how it should have been approached, and that's why the commercial market hasn't really adopted it in any large numbers. But certainly they say it has shown promise, but it needs greater guidance from the government. So we'll see what happens with Mr. Gove and his department, who we tend to speak about quite a lot on this show. Let's move to our final story this week. Our old favourite, stamp duty, Joe. Not surprisingly, record receipts in the last 12 months. The tax take from stamp duty has increased to pre-pandemic levels, you'll be pleased to hear. at 15.4 billion, up from 14 billion the previous year, despite high mortgage rates and average buyer paying £9,937. Two-thirds of the transactions were residential purchases, accounting for 11.7 billion of receipts. So now we pay on average, Joe, £9,937 in stamp duty, or certainly we did in 22-23, remaining below the 11,202 recorded the year before. And yet, somewhat surprisingly, given the fragile state of the housing market, total residential tax take surprisingly increased by over 1.5 billion from 10 billion from the 2021-22 period. For the final quarter of last year, however, the figure dropped significantly, down 25% on the corresponding quarter in 2022. So we're paying 10 grand each, Joe, for our stamp duty. Once again, it looks like the property owner is being targeted, dare I say.
Well, you know, we've yes, it's an old subject that comes back and back again. They're never going to drop this idea. It's free money. Why would the government actually think about, saying, oh well, actually we feel good now, let's just drop the stamp duty? It's just never going to happen. It's a dream, a pipe dream, in my opinion. Yes, they use it as a little yo-yo every so often. Drop the stamp duty percentage for a short period for the first-time buyers, etc. But the reality is, it's free money. They get it all the time because the public, the British public, and our mentality, our state of mind, and our way of living here in the United Kingdom is that we want to own our own home. Ultimately, that is the ultimate dream, no matter what happens. Even now, whilst the rental market is buoyant, people want to get out of the rental market as quickly as possible because it's cheaper for them in most cases if they can stack up and borrow the money from a bank to have a mortgage, which is lesser monthly commitment than it is on the rental market, which the rental market's gone absolutely haywire because people have found it hard to go and borrow the money in the first place. So constantly there's going to be a positive towards property purchase. It's part of why we exist as a program. It's part of why our DNA says around the dinner table, pretty much every other conversation you talk about. I don't think I actually have a conversation with pretty much anyone that doesn't relate in some point at some part of that discussion about what's the housing market doing and where I'd like to live and what my dream home is going to be. And so it's just the top subject, or one of the top subjects, right up there. And that's never going to change. It's never changed in the last 40 odd years, and I'm sure people like Bob and Guy will tell you that these are the demands that people have, and we've had the ups and downs of what the housing market does, but housing market will continue, irrespective of where it is, because ultimately we have a desire to own our own home. So the government will ultimately have a desire to charge us £10,000 for every time you want to buy a home.
Well, stamp duty receipts have been understandably volatile in recent years because obviously we had the pandemic. So in the tax year 22-23, as we said, it's 15.4 billion, which is up 9.2% on the previous year. The latest finalised HMRC figures show that receipts for 21-22, so that's the pandemic tax year, increased by 63%. So that's the race for space, basically, Joe. So receipts on stamp duty were up 63% to 14.1 billion from 8 billion the year before. So 63% increase. And interestingly, stamp duty earned just 3.68 billion for the Treasury in 2000 to 2001. So the take in 22-23 represents a fourfold nominal increase in just over 2 decades. So stamp duty's quadrupled in 20 years.
Well, I mean, there lies the answer, doesn't it, Paul, of why we exist as a program and why the property market continues to do. The government is never going to let that go. So yes, we have these 5 or 10% price reductions, and we kick and scream about, oh my God, I'm losing money on my property. But the reality of it is, we're not, because they are continue to have sales. There are continue to people that want to move. There's a continued investment. There's a continued demand on people wanting to buy their first home, and with that, the government will continue to cash in from those wishes and wants that we have, that everybody wants to try and have their own home. So, just those numbers tell you the story on its own. For those that are listening and viewing, that, don't sit back. I've always said, people will say, when's the right time to buy? I always say, now. Basically, if you leave it another year, you'd be going back, I wish I'd bought it a year ago. I can tell you, I've got people that say, I wish I bought it 40 years ago. So, the reality is there's no ever right time. The right time is when you can afford it, you can get your borrowing, go and buy.
There is one factor, of course, that I'd forgotten about, and I suspect it's probably at the back of your mind somewhere as well, Joe, because we'd forgotten that land tax or stamp duty is set to increase in March 2025, because currently we pay stamp duty over the value of 250,000, but this is going to be halved again, back to 125,000 in March 2025. So more and more people are going to, of course, have to pay more as a result of the ceiling, the threshold being lowered. And I can see that leading to a rush to get your property bought by March 2025, because they're going to lose, they're going to pay extra stamp duty after that, aren't they?
Well, they brought it down. It used to be 125, and then they increased the threshold during the period of pandemic and trying to make that thing happen. It was set a target that by 2025 that will fall back. I'm pretty confident that what will happen is they will leave that where it is, because whilst there'll be a rush to buy properties, which will give a false inflation in the short term of values and so forth. In order to sustain some sort of stability, I would imagine that they will probably just keep that at the 250. Whoever comes in into 2025, they would be foolhardy to think that it's good to go and increase that threshold, or decrease that threshold and stop people buying for whoever enters in 2025, end of 24, 25. So I can imagine that they'll probably hold that. But then you know what? Life is full of surprises.
And it's no surprise that we're at the end of our time, Joe. So thank you very much indeed for your your comments and contribution as always. Thank you for watching Property Matters. We'll be back with another Property Matters very soon.